Let's get the elephant out of the room right here in the beginning. A lot of you guys know that I predicted April 2nd would end up being a bullish day for the markets, as a lot of people anticipated crashing and burning. I thought there would be a whodunit. And while yesterday morning started off looking very favorable for Bitcoin, for the markets, we ended with a colossal crash. And the question is, what happens next? But I want to start off by just making sure we're clear here with three big words that people really struggle to say, but I have to say it. No apologies, no excuses. I was wrong. I'm going to throw another three words at you. I was wrong. And I am sorry. Right? There's our 6 words. But what do we do now? Where do we go from here? What is the future of Bitcoin? What is the future of the markets? How do we respond to this crash in the crypto space? Is it about to be over, or is it about to get a whole lot worse? Are the tariffs that just went into effect yesterday going to crash us into another recession, or was there a fake out, and are we about to enter into a major boom of the economy? We're going to tackle all that and a whole lot more today. So if you can stick around with me, even though I was wrong, click that like button right now. Stick around to the end of the show. If you're new here, consider hitting subscribe. If you like hearing from honest people who give you their best bet, the best takes they can give you, even when they're wrong occasionally, you found the right channel here. We're going to be honest with you, even when we're wrong or right. But first, before we get into the content, we got to roll the intro. Welcome on into the Investing Bros live show, everybody. It is so good to have you guys back here today as we unpack the chaos that was yesterday, right? Very emotional day. Big boom early, a big boom late too, just opposite direction. One was a favorable boom. The other was probably a colossal destruction. Either way, we are here to unpack all of that. I'm joined here by two fantastic individuals who, once again, we have not been on the same page. Listen, yesterday I was wearing black. You guys were wearing blue. Today I switched to gray, but you guys did not send me that we were going with black shirts today. I don't know. Maybe yours is blue, Tshroom. How are you guys doing? Please text me from now on about the shirt arrangements. Smay, how are you feeling today?
Speaking of big booms, I big boomed. No, almost got you there. I'm doing great.
Okay, good.
Dave,
That could have gone a lot of different places there with that response. I'm doing good. Smay had a fun day this morning with Tshroom. My last golf day in Georgia. And guess what? I hit a 95, the best score I've gotten on this course. So I'm doing all right. Crypto markets aren't doing good, but Tim's golf game's doing okay. That does debunk the theory, though, that when I play golf, markets pump. That's over, right? So I can't go on a hiatus of vacation playing golf nonstop. With that said, though, Tshroom, you shot a pretty good game this morning as well. How are you doing today?
Well, Tim, I'm doing better than I deserve, and I'm curious what folks think Smay means when he says big boom. Let me know in the chat, what does big boom equal?
Don't please.
Let me know.
The comment section is going to go berserk.
I was talking about I had a good day. It was 5 big booms. Boom, 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 boom.
All right, let's get out of this intro. Let's get into the topics of the day today. Let's start off. Let's throw it over to you, Tshroom. Let's get into the details. Let's get into the economics. And of course, you can't cover what's happening in the economy right now without addressing those tariff announcements we did get last night. Let's unpack that for people who maybe are coming into this. They know that something bad happened last night, but they're not really certain what happened. Let's unpack what's happening with tariffs and then get into the rest of the big information coming out that has big economic impacts. Take it away, Tshroom.
They're big, they're scary, they're tariffs. This is the Kabesi letters summary of yesterday, and I think it's a pretty good one. The most shocking part about POTUS's reciprocal tariff day was as follows. The fact that the tariffs were imposed on 185 countries at once and the news was not leaked in advance is incredible. That is an incredible feat of tight-lippedness. This is likely the largest wave of tariffs imposed on the U.S. in history and by the U.S. in history, and markets had no idea it was coming. In fact, their initial announcement of a 10% baseline tariff, stocks rallied because markets thought that was all. Then POTUS picked up the poster as shown below. Stocks erased 2 trillion in minutes. We are truly witnessing history. Now, another detail that isn't listed here is that the market was not pricing in a 10% baseline tariff, but it also wasn't pricing in that most of the tariffs that the United States was going to implement was only half of what was being implemented on the United States. So the market, again, the theme is uncertainty. Tim, what do you think about Kebesi's letter's summary of the tariff Tuesday?
So I don't necessarily agree with the take there that the markets were surprised. They were surprised in some way, right? I'm not saying that's wrong, but when it says they were not surprised, or they were surprised about tit for tat tariffs, what does the word reciprocal mean? It means whatever other countries are doing to us, we're going to do back to them. So the reality is, in that thought process, you should have been happily surprised, because if you go through that list that Tshroom just showed you, I think there might be 1 or 2 countries where it is tit for tat, but for the most part, we're going way lower with tariffs against other countries than they are going against us. Now, again, I'm not trying to sit here and say that means tariffs are the greatest thing ever. You guys decide in the comment section. You guys decide in the chat. Vote on the poll about what you think about tariffs. Where I could get on board with the surprise here, and maybe this is exactly why we were surprised and the markets dipped down. Maybe this was I read the whole thing wrong, and I thought the manipulation would send things to the upside, but the manipulation still sent things down. But I could understand if some people were thinking we would only do 10% because maybe the tariffs of other countries are only sitting in the world of 10 to 20%. I think a lot of people, after seeing that chart, were decently surprised about just how high the tariffs that other countries have put against the United States actually are. And I just asked this question to anyone, whether you like tariffs, whether you dislike tariffs. What are your thoughts about seeing those ridiculously high numbers that other countries have imposed on the U.S.? I mean, for months now, we've been hearing some people praise tariffs. We've been hearing other people say that tariffs are the worst thing ever and we need to have free trade. But when I see those things, free trade looks like it never actually existed. Every other country worldwide has said, we're going to put ourselves first and we're going to put our workers first. And so anything coming from the United States, we're going to put hefty tariffs on. Let me know your thoughts about, maybe you don't like how prices are going to increase, but is it still philosophically wrong that the United States would also want to put their own workers and people first? Let me know in the comments there. But either way, when they say we were surprised, you can't say you were surprised about Trump giving big tariffs or the president of the United States giving big tariffs. You can say you were surprised at just how hefty the tariffs from other countries had already been.
Yeah. Yeah, I think it's a valid point. And just to give a little bit of optics to these rates, some of you may not have taken the time to look at them. And after all, you tune into a show like this for those types of details. If you jump over to my screen here, for example, China, 67%, and we put on a 34%. European Union, 39%, we put on a 20%. Vietnam, 90%, we put on 46%, on down the line. Now, there are a couple, like in the case of Brazil, that only has on a 10% for us. We just matched it. United Kingdom, 10% for us. We just matched it, right? So that gives you a little bit of a tasting, a little bit of an understanding of, wow, there's some disproportionality here that is hurting the United States. Now, it's controversial. It's not so cut and dry. In some cases, the answer is yes. In some cases, the answer is no. In some subcategories of industry, in certain sectors, the answer is yes. In others, the answer is no. But what this administration is doing is taking a decisive move in a specific direction. And that's why Kebesi letter is ultimately right in that this is a very big day historically. Yesterday was the signing into law of all of these tariffs. Now, I don't know if that now there's 2 things that I think that the market hasn't baked in yet, right? The 10% baseline, the market didn't know that until yesterday, right? So that's something that's being digested in real time. The market also didn't realize that there were only going to be basically halfway reciprocal tariffs on all the other nations. So there's news to the downside and to the upside, because this is, and so of course this is going to have to be digested throughout the rest of this week on into next week. The timeline is really the critical part here. And what do you do in these types of moments? This is what we're going to be talking about on today's show, trying to get to some conclusions.
Yeah, absolutely. And now it's time to get into, now that we've kind of unpacked some details that happened, now let's talk about the results, right? We're going to go look at charts here in a second. I'll spoil it for you. Charts went down, but what else was affected by this news yesterday, Tshroom? I believe there's a couple different features here we got to look at. We got to look at the 10-year treasury yield. We got to look at the CME futures, and we got to look at Dixie, the power of the dollar. Let's start off with that 10-year treasury yield. Let's look at that chart, Tshroom, and explain to everybody why it's such an important detail that people need to be aware of.
Absolutely. So jumping over to my screen, you don't get to see me on the charts too often, so smash a like for that. But as you can see here, the current yield rates for the 10-year are right around 4%. Now, we haven't seen this level on the 10-year. You have to go all the way back to October of 2024, right? This is pretty extreme. This is actually what the current administration is trying to do. The Secretary of the Treasury, Scott Bessent, this is what he is attempting to engineer. He is trying to shake folks out of risk and go into fixed income. And the other flip side way to say that is he's trying to make people buy bonds and bring those rates down. There's an inverse correlation between the demand for bonds and the rates. When there's more demand, the rates come down. When there's less demand, the rates go up. It's an incentive structure. It's very simple. Scott Bessent has been a hedge fund manager for his entire career. He understands this dynamic intimately. So what you are seeing on my screen is the intended outcome of what was presented yesterday by POTUS. It's pretty wild.
Before you go away from that chart, Tshroom, I want to go back to it. There's a pattern developing on that chart called a head and shoulders pattern. Right. Tell us a little more. First of all, so just so you guys know, that head and shoulders pattern means we probably are going back to that low we saw earlier in that screen. But what would it mean for the economy? What would it mean for the everyday user if the 10-year treasury rate, if the bonds, if they went down low? Is that good? Is that bad? Go back to the chart real quick so people can see it and identify, kind of draw it for them there, Tshroom, the head and shoulders pattern kind of forming.
So there's two different ways to interpret it, right? Because when the bond yields come down, categorically that usually means that folks are rotating out of risk, meaning out of stocks, out of crypto, and into fixed income. If we continue this head and shoulders down, we might come down. It's going to take some time, but we might get back down to levels of 3.5%. Now, this is key, because the lower this rate goes, the better the situation, the better the positioning of the administration to refinance the debt, right? You may have read a heady article about, the theory behind POTUS's and the Secretary of Commerce's kind of strategy to refinance the debt that we are in. You don't refinance a debt at a slightly lower rate. You want to refinance it at a much lower rate, right? So through much of 2025, rates have been right around in here, or just south of 4.9, and down to finding support right around 4.1, right? So now that we've penetrated through 4.1 and we're hovering down around 4, this is giving Scott and his team over at the Treasury of the United States kind of the go-ahead. Let's get our ducks in order. Let's get our troops aligned, because we're going to be doing some refinancing very, very soon. We don't know how long the rates are going to stay down this low. Now, is it that simple? Of course, you may, if you are intimately familiar with the bond market, you might be screaming at your TV. There's more to this than it's more complicated than this. It is, right? But ultimately, either the rates are going up or they're coming down. Yesterday was a big event. The rates went in the direction that the administration needed them to.
Right. Very, very good. Well, let's move into another chart I'm going to show here. Go ahead and go to my screen, Smay. Another thing that was heavily affected by yesterday's tariff announcements was the FedWatch Tool for CME predicting what will happen with rate cuts the rest of this year. Now, the next FOMC meeting, we will be covering it live. It will be May 7th. I think it's May 7th. Maybe it's May 8th. I don't know. I think it's going to be the 7th that it comes out here. That's what it says there. 77% are still saying do not expect a rate cut to come in May. Most people were expecting June anyway, but it's always going to be important to see, does this shift early? Do we see Jerome Powell and the Fed, which, by the way, Jerome Powell speaks tomorrow, so this chart's going to probably move a little bit more after he speaks tomorrow. It's going to be very important to tune in for that. But We're still predicting we will stay at 425 to 450. Okay, if I were to zoom in for you right there, 425 to 450, that's where we currently are. Heavily predicting 76 or 77.6% are saying we're staying there. Okay. This was closer to 90 though last week. So be aware of that detail. Let's go to June, where we've gone back and forth predicting where we'll get our first rate cut. Here's where things are going to get very interesting. I'll zoom in, kind of move this over. 21% are saying that we're going to stay paused, 425 to 450. Last week, this was sitting north of 30%. So even though we haven't been staying updated on it every single day, a major shift, which was yesterday, has really heavily pushed us into a higher probability that June will be the first rate cut of 2025. 62.6% are saying it will be one rate cut to 400 to 425. 16.3% are saying 375 to 400. All right, so probably just one cut, but maybe two, right? Probably just one. Here's where things will get very interesting, though, because coming into 2025, we were predicting, and the markets were pumping, predicting that 2025 would probably have 3 rate cuts, okay? We would probably be sitting between 350 to 375. Then earlier this year, about a week and some change ago, the heavy predictors were that by December, we'd only get 2 rate cuts. And I'm drawing this out. I'm not showing you December yet because I want to show you what is going on right now. Keep that in mind. The thought is we came into the year thinking 3. Last week, they were thinking just 2. Here is what December's prediction looks like today. The highest probability, 34.8%, is saying that we will be at 325 to 350. That's not 2. That's not 3 cuts. Ladies and gentlemen, that is 4 cuts. 29.2% are saying 3. 18% are saying 5. Really, what you're looking at here is 12 plus 2 plus pretty much 0. 14% are saying less than 3, which leaves us with a whopping 82% chance. That's bad math there. Excuse me. 86% chance. Apologize for that, everybody. I was wrong again. 86% chance that we will have at least 3 rate cuts. And then the highest probability is at 4. If this is the case, ladies and gentlemen, that is quantitative easing. And everyone's so worried about the inflationary impact of what the tariffs meant yesterday. But what CME Futures is talking about today, that the probabilities have increased, that quantitative easing is coming. And not just even what we predicted earlier in the year, it might be even greater, giving us an entire 1% drop in interest rates from the Fed. Now, again, we do have to wait until tomorrow to hear from Jerome Powell. So let's not count the chickens before they're hatched. That's an expression I use all the time, but there's a reason why. It's a good expression. Don't get too excited just yet. But if this is true, this could be another level of liquidity coming into the markets that still would have us having a form of a bull market in the year 2025. Before we move on from that, Tshroom, anything you want to add to that conversation when we're looking at the rate cuts and now we're predicting even more than we were expecting back in January?
Well, you're going to have to help me out with this, Tim, but I've drawn out the head and shoulders here on the rates. Now, this goes back to like
another one,
mid-September, back here of 2024. So let's do, so this is my memory of how you do the measured move on this. You go from the top, the local high, to the neckline, right?
Very good. Yep.
And then you bring your measured move down
to the breakout.
And that would essentially be down to 3.4, right? Which correlates with what the CME is saying, right? And that would be about a 16% move for the treasuries. From the neckline, from the current live price, that would be about a 15% move. So that's quite a move, right? Now, how could that correlate to the stock market, right? Would stocks go higher in that scenario? No, because the money's got to come from somewhere to put buy pressure on the bonds to reduce the rate, right? So more than likely, money would be coming out of the equity market for that to happen.
Very interesting. Very interesting. All right, let's move on to one more. We're going to do some technical analysis here in just a couple of minutes. We did have to get a lot of this economic data out of the way. There's one more chart that Tshroom is going to show you, and then I will be going in and we're going to take a look at the S&P 500. And as wrong as I was about Bitcoin and where the market's going to go on April 2nd, I do want to say, if you guys were watching our shows the last couple of days covering the S&P 500, it did way faster than I thought it would, but it did pretty much exactly what we told you it needed to do on the chart. We'll show you that in a second. But first, how is the Dixie responding right now? The power of the dollar, how's it responding to yesterday's news, Tshroom?
Absolutely. Well, it's down. If we take a look here, this in theory shouldn't look too dissimilar from the 10-year treasuries, but right now, from the previous candle, it is down just about 2% and got as low as 2.8% again from the high of the previous candle. If I go from the close of the previous candle, I'm on the daily, it's about a 0.5% shed to the top of this candle, and then about 1.5. So what does this mean? Why do we care? It's broken. It attempted to move up above the Bollinger Band, the 20-day moving average there for the dollar, rejected off of that, and then on the news just plummeted. So the dollar is weakening, right? The dollar is weakening at the same time treasury yields are coming down as well. That makes sense, right? So that's a pretty big move. And historically, Bitcoin and Dixie actually move in convergence. I'm sorry, in divergence, not in convergence. So the fact that they've been really moving in convergence is a little bit peculiar. What's your read on that? Why do you think that that's continuing? And now that the dollar's coming down, do you think that there could be a potential for it to go back into divergence?
It's actually been very interesting because I think what you're saying there is right. Historically, Bitcoin and the Dixie trade in opposite directions. They've been trading pretty similarly, though, since September. Go to my chart here real quickly as we look at the Dixie. I do think there's going to be a moment where one of them decides to bounce and the other one goes lower, right? I think we will get back into a phase where they go in opposite directions. But go back here. September of 2024, the Dixie bottoms out here just under $100, and then it makes its way back up. Where we peak? Right there before January 20th in 2025. Bitcoin, in case you didn't know, almost the same timeline. Bottomed out in September, rallied into January, and now it's been pulling back. So it's actually been very strange watching the Dixie and Bitcoin trade right alongside each other. This is bound to stop at some point. I mean, when you just get into the nature of what Bitcoin is, it's a hedge against inflation. The whole purpose of Bitcoin long-term is to say when the dollar is weak, Bitcoin will be strong. As the dollar starts to recover, maybe people will take a little bit more money out of their Bitcoin. So at some point, we're going to diverge again. At some point, one of these charts is going to bounce and one of these charts is going to collapse. But for right now, they are trading very similarly. Interestingly, though, as they are trading similarly, this is something to be aware of. Dixie's approaching a long-term support level, that's been in effect since January of 2023 in this zone right around $100. Right? So as long as they're trading together, that's another reason to potentially think about, hey, is Bitcoin getting closer to a longer term support level? Is going to make some sort of major bounce. And we will talk more about Bitcoin's chart here in just a couple minutes. Stick with us. I know today's been a little bit different of a show, but smash that like button if you're enjoying it so far. Before I get into Bitcoin, and I'm going to talk about what we got wrong, and we're talking about what potentially could happen next, let's talk about something we did get right. Something we did tell you guys, be prepared on the S&P 500 for, and the question is going to be, do we hold support or do we go lower? But we told you guys yesterday, don't be surprised to see a $5,700 rejection from this descending level of resistance on the Dixie. Don't be surprised to see that rejection. If you go to the 4-hour chart, we knew that this would be where the 4-hour smart trail was going to be. And sure enough, that's exactly where we stopped yesterday. After that, we told you, don't be surprised if the Dixie falls to the next level of support, goes lower than it's been here in quite some time, and revisits the same support that we had back in September of 2024. Guess are we shot down to today on this news? Right there, we are at a decision point. Will we see some support on the Dixie? And will we start to move back to the upside and break out of a bullish formation that is a falling wedge? Or will we lose that support? And here's what I'll tell you guys. I might tell you what my assumption is, but I'm going to be doing a very good job here, and I think I have been doing a good job recently of telling you guys the possibilities. I can tell you which one I think is more probable, but you need to be prepared for either direction. The bullish case for the Dixie remains that this is a strong level of support. We're back in the green support band. We're on the green support line. This is a bullish formation. The Dixie really, if it makes a move here correctly, would want to break back to the upside and then maybe make its way back up towards almost 6,000. Let's call it 5,950. But that could be where we end up going in a bullish scenario for the Dixie. Keep that in mind and watch how that one ends up playing out. The downside is where the next level of support would be down here towards 51.50. If we lose this support right here, next stopping point is probably going to be a pretty rough fall. Might not happen overnight, but over the course of a couple of days or maybe a couple of weeks, the next support line for the Dixie is going to be down here at 51.50, give or take. Right, what we are looking at right now, as far as oscillators are confirmed, the daily chart absolutely looking bearish, but it's going to be responding to that big crash that we had. Again, you got to remember, we closed yesterday at 56.70. Today, we are down at 54. I mean, we're talking about $1,300 difference, a drop. 1,300 points in the Dixie is down. Where are we sitting here with our oscillators, though? The money flow has not caught up. The money flow is not overly negative. And so what you're going to be watching for here is if we can get some form of a bounce over today, tomorrow, and early into next week, the RSI, the MACD, the Luxago oscillators, they're all putting in higher lows where the price action clearly is putting in lower low. That's what we call bullish divergence. It could end up combine that with here's recent support. There's reasons to potentially expect a bounce here on the S&P 500. I just want you to know if that fails and we do drop, it's going to be a rough drop down here, even further down towards 51.50. So keep that in mind when you're looking at the S&P 500. Now, moving into the crypto space and talking about Bitcoin. Before I look at some price targets there, everyone should be continuing to watch this chart, the Bitcoin dominance chart. Bitcoin's dominance, we told you the other day after breaking this resistance, probably pretty likely to at least come back up to 64.30. 64.3%. There's a chance it goes even higher. Who knows? I don't think this will happen, but you can't rule out at this point that we match some highs from back in 2021. I would be surprised. But I just want to be very clear. If we get back up here above 64 and get above 65, watch out for a move back up towards 70% like we had back in 2021. Again, I'd be surprised, but you cannot rule it out with how these markets have been moving. When it comes to Bitcoin, a lot of you guys clicked on this video here today. You see that thumbnail. You see me saying I was wrong. And you know what? I'm not going to sit here and give an excuse. I'm not going to try to dance my way out of it. I might tell you some different things that happened where some things I got right, but I'm not going to sugarcoat. I got yesterday's move wrong, right? For weeks, I was saying that I thought that this terrible day that we were looking at, April 2nd, the tariffs that were coming, everyone was going to be so negative about that day. And in fact, the manipulation would flip us to the upside. It would be a sell the rumor, buy the news type of an event. And for a moment, for a glimpse yesterday, it looked like I was right? We shot back up to almost $89,000, 88,500 levels we hadn't seen here since about a week or so ago, but it looked like everything was going in the right direction. And then the markets just fell beneath us. We started to lose support. I told you guys in an X post today, if you guys are wondering, man, is Tim feeling the pain too? I had my worst trade loss of 2025 yesterday, where I thought the volatility was going to bounce back here around $86,000. I got into a trade and I was so confident too. I mean, I was just wrong, right? This is just me being wrong. I was confident about this move, and I rarely do this, but I actually risked $1,000 more than my profits for the day, and I let that sucker ride all the way to my stop loss. Yesterday was the first day that we've been doing live trading that I ended negative for the day, and I ended up negative by $1,000. Why? Because the blood just wouldn't stop. I was almost certain that after 86,000, we'd stop here around 83.9. Didn't stop. It just kept going and kept going. And even after a little brief bounce last night, the Asian markets actually bought up Bitcoin, kind of brought it back up here to 83.6, 83.7, kind of stopped there. And then this morning, America went right back to work and continued to bring the markets back down, right? I can't sit here and give you an excuse for I was wrong. The fact is I was wrong. I told you guys that I believed that Bitcoin was heading back to 90K. And then after 90K, that's when I thought we'd make a bigger long-term move to 74. Yesterday morning, if you said, Tim, tell me which one happens first, 90K or 74K, I was sitting here telling you guys, I believe 90K comes and then 74 later. And I was wrong. Today, you asked me that same question. Technically, we're not out of the woods. We easily could bounce at 80,000, but the severity and the strength of how we dropped yesterday, I'm probably sitting 50-50, but I might lean a little more towards Tim, educated guess which one happens first, 74K or 90K, potentially 74K. And I'll explain why here in a second. We had a Greek fake out yesterday where for the first time since we started this trend line, we had a big break above the descending resistance. But this is why candle closing is so important, because we shot up here to 88.5 and then dipping back down, we have once again closed a daily candle below this level of resistance. Scam wicks don't mean anything for long-term trajectory. We are still in a bearish trend. This is still a very strong level of resistance. And as we're starting to make our move back down, guess where the next target is if this formation continues, right? We've been bouncing, ping-ponging back and forth here between the support resistance level. Well, now after a double touch of this resistance, unless we can mount a really good rally and make a break to the upside, the next move would be to retest support in this yellow box that we have highlighted between $74,000 and $72,000. Okay. So am I guaranteeing you? I want to be very clear here. Am I guaranteeing you we are about to drop to 72, 74? No, I'm not guaranteeing anything. I can't guarantee things. And if I tried to, I would just be lying to you because I don't know. Like the reality is I don't know. But I do know the possibilities. And in my viewpoint of what I'm seeing here, the probabilities are looking more likely that 74K wants to come before 90. All right. So let's set that up. Make sure I'm very clear on that front. Now I'll move into, hey, does somebody want a little bit of hope? Do you want a thing to look at and say, hey, Tim, is it potentially in the cards for us to put in a higher low from this dip back here at 77,000 to maybe stop here and move back the upside? It is possible. It's just not on the table just yet. What I am going to be watching for here, as we just obliterated long liquidity last night. Again, if you were to look at this, let's go back here. Let me show you what liquidations looked like yesterday as we were, and I've got to go to a lower time frame here, as the President of the United States was talking and giving us all the updates on what was going on with tariffs. Just look at all of this. Look at all of these long liquidations in play. And then as you let the charts play out, it just obliterated. It's going away here, but it'll keep going here. We have taken out, there's a big chunk right here around 82, give or take. We just came down here today and took all of that out. Well, let me go ahead and stop that replay. Thank you there, replay. Where is the next level we're watching? Are we seeing a bounce right here, right now? And I'm going to start looking at the 1 hour chart as my next level to say, hey, if we can get something bullish going on the 1 hour chart, we can turn that bullishness on the 1 hour chart into bullishness on the 4 hour, and then the daily, and the 2 daily. And again, and maybe we have something happening there. But one of the things I want to see is bullish divergence. And while technically the RSI is extremely overextended right now, let me kind of zoom in for you on that one. We are low here. We didn't quite get a higher low here. We still have lower lows coming in that are matching the lower lows in price action. Same thing with the oscillator, the Luxago oscillator. While it's flirting with a potential buy signal coming soon, green reversal, bullish momentum, possibly some positive money flow coming back that could send a temporary bounce on Bitcoin, maybe back up here towards 83.6 as that, smart trail is descending down. That to me is not going to be a strong bottom position. What I think we're going to need to see is an official bullish divergence move on the 1 hour, and potentially I'd really like to see it on the 4 hour as well. And we are in a camp right now on the 4 hour where we really could see that happen soon if the price keeps descending. Right at the moment, the RSI, the MACD, and the Luxago oscillator are all giving us what looks like is going to be higher lows on the oscillators. Okay. The price action is technically still a higher low at the moment, but if we come back down, the next support level that I'm keeping an eye on is between 80,800 and 80,000 itself, right? And if we can get down there and close some 4 hour candles there and the oscillator stay high, we very well might at that point have ourselves a 4 hour bullish divergence. This is one of the support levels that I have been talking about for a while. Even though I thought 90K was coming first, I did tell everybody, hey, if we lose this 83, the next level we're going to be coming down here towards 80,700. The reason for that is, once again, because of the heavy liquidations. Even now, these liquidations have gone back. There's a fat stack of liquidations that expert traders, whales, can still target to keep the blood coming. But like I said, if we target that area, where again, the highest amounts coming in around 81,000 almost, there is a grouping that comes as low as 80,000. If we do take all that liquidity out, and the 4 hour chart does still keep us with higher lows on the oscillators, That would be 4-hour bullish divergence. That would probably come with a 4-hour buy signal. The target at the very least sitting at the moment, it would be 86,150. If we can form a massive bullish movement here, we could go a lot higher and then make our way back up here towards 89,000. At that case, with a much larger breakout of this resistance, we're starting to talk about the bigger move to go higher than that. So that is your bullish hope, right? The bullish things on the charts that still could happen to send prices back up. But I'm saying all this to let you know that that has to come out, and it has to play out perfectly, and we have to see that bullish divergence before we can buy on it. I'm not sitting here telling you guys get your buy-in orders at 81,000. I'm not saying get your buy-in orders at 80,000. I'm saying if we take out these liquidations and we set up some 4-hour bullish divergence, we should see a decent little pop back up. How high? That's what we have to continue to watch and see at this point. But that is what we're watching. That's what we're waiting for here on Bitcoin. If this level is lost and we start to go below 80,000, while technically 77 is going to have some support as well, all of a sudden that 74 to 72 becomes a lot more likely to see happen, play out over the next couple of weeks. Good news is there will be another major level of support at those levels. Let me go out to the daily chart here, and let's look at the fixed range volume profile going all the way back to the bear market bottom, which, by the way, still want to just remind you guys, I know it feels like there's a lot of blood in the streets. I know the fear and greed index, getting rid of that ad right there, fear and greed index back in the fear here at 25, and yet from this long-term viewpoint, this is still a good look for Bitcoin's chart. This is still extremely bullish chart. But look at the fixed range volume profile. I want to show you the next significant level of support that I'm keeping my eye on. And for that, we have to look at the gaps in volume. Guess where the next major gap is going to be before the volume picks back up? Right here at $74,000. So a lot of reasons to think that that should be some major support. It's the former high from back in March of 2024. But what we're watching right now, unless the bulls can mount back a furious rally here in the next couple of days, it does look like Bitcoin wants to make its way back down towards that 2-weekly smart trail, that sell signal we've been talking about now for a while. It wants to make its way back down here to 74, 72, hit support, and then we decide if we make a big bounce after that. That is the Bitcoin technical analysis. We spent a lot of time here getting through all of this. Make sure, everybody, to smash that like button right now. It's time to transition, though, into some other stories. We have a small story. It's not going to take very long, but an altcoin that is getting some good news today, despite the fact that the markets are completely down, and that is that the SEC is coming out acknowledging an ETF for Solana. Tshroom, anything else to that story that people need to know about?
Yeah, I mean, that's essentially it. I mean, it's from Fidelity. US fully acknowledges filing for Fidelity's spot Solana ETF. Despite it being in the top 10 cryptos by market cap for a long time, it still does not have a spot ETF in the United States. In fact, the only cryptos that do are, actually, let me know in the chat. What do you think that, obviously I know, but let me know what cryptos have ETFs in the United States. Let's test our knowledge here in the chat. But this should be very, very bullish for Solana. And I think that these ETF passages in the United States are going to be a bullish catalyst for altcoin season. Will they be the bullish catalyst? It's a little bit too murky. It's a little bit too unclear just yet. I think some bills that we'll talk about here in a second out of Congress, some more regulatory clarity will also be another big catalyst as well. But let's check out Solana. Let's see how it's reacting to this ETF announcement through all the noise of the tariffs and everything else.
There we go. All right, let's go ahead and get in here and look at the technical analysis on Solana. I think we did look at this yesterday, so some of it's going to be refreshers. But with this new announcement, we want to be aware of what is going on with Solana. Again, Solana is now trending to the downside here as well. While we did have a buy signal here more recently on the daily signal, with this recent rejection and coming back down to the support level, it does look like that daily buy signal has been invalidated. We are rejecting, coming back down here, could not get above that descending level of resistance right there in this falling wedge formation, which means more than likely what we're looking at here is a pullback down to support coming in around that $100 mark. I do believe if you kind of zoom out here and you look at, let's go out to the 4-hour chart here. It's actually, there's not even going to be liquidations on there because it's been such a long time since we were down there. Let's zoom out here on the daily chart. see if it's going to give us anything. All right. So I probably would have to look at a different one. The Broz, there we go. Liquidation is coming in here at 103 is the next big pocket. Don't be surprised it's not yellow, because obviously with this chart, it's going to have a little less volume than others, but you're looking at the big pockets. Whenever you look at the daily chart liquidations here on TradingView, you're looking at the pockets of interesting liquidations right here. 104 is going to be an area. You don't have to stop right there. I would look for support coming down beneath it. And right there, 100K, you're having two different levels of support that are really supporting 100K here. The falling wedge support, that green line right there, and a longer-term trend line that was in play way back in 2024. You're going to find some crossover right there. Along with that, you also want to take a look, like we'd like to look at with our fixed range volume, kind of come back in here, and you're going to notice right in that pocket, actually it's going to be a little higher than that, 106, got a nice volume gap right in here. You can see how well this support level held up at 119 for so long, and even here more recently, but as you're watching down below us, 107, 106, and then if that gets lost, we're talking about $90 is the next gap on fixed range volume that I would be keeping an eye on here. But let's check out the strength of the longer term movements, because even though we're down today and Solana is about to get to the lowest place it's been in 2025, if this ends up happening, there is going to be a reason to continue to watch some longer term trends here. For example, like our weekly chart here, where we are still seeing, we got to see some close here on the weekly chart stay high. We were tracking some bullish divergence potentially here. It doesn't look like we're going to get that. Again, it looks like we are still putting in lower lows with everything else. So not seeing that weekly bullish divergence like we are seeing on some other cryptocurrencies. So forgive me. I thought we were going to see something there. That is not what we have going on Solana's chart. The news is very bullish, but it's long-term bullish news. In the short term, let's go back here to the 2-daily, and then we'll look at the 4-hour as well. We are building a 2-daily bubble right here, which does look like it's going to want to pop at some point. But again, that move towards 100K. If Bitcoin hits 74, 72, do not be surprised to see Solana back down here towards 100. But that bubble forming on the 2-daily chart, that's a good bubble to keep an eye on. When it pops, we should get quite the boost there on the Solana chart, with prices heading back up towards 177. That could take months, like 2-3 months on the 2-daily chart, but it is something we are watching happen right there on Solana. Let's get that bounce right there. There was one other thing I want to take a look at. Oh yeah, the 4-hour chart. Let's see what the 4-hour chart looks like for the next couple of days. Big volume coming in there on the 4-hour chart. We did get a temporary buy signal right there. It did shoot us up. We hit that 4-hour smart trail, and now we're heading to the downside. Where are the targets down here? There you go. Take profits. Let's look at some order blocks here as well. Well, they're not going to have order blocks there. Let's look at liquidations. Big liquidations going to come down here towards 109, but the take profit targets kind of coming there right in line with 105 down towards 93. Kind of put there right in the middle, that 103, 100 mark. That's where I do think Solana is working. Even on the 4-hour chart, it's looking like that's where it does want to go. Last thing, let's just look at the daily chart liquidations here. Yeah, we already did. The daily chart liquidations were coming in at 106, 100. So very, very good. There's your Solana technical analysis. Good news, but that good news probably isn't enough to save the price action. Price action does probably want to take a little bit more of a spill after this hard rejection from yesterday. With that said, it is time to keep going on here. There's one more news headline we want to get into before we get to our stock of the day. Yes, we traditionally cover a lot of crypto markets, but we are going to be covering more stocks as well. And right now, with what we had happen yesterday, we were talking about this in our pre-planning meeting. What is going to be the best cryptos or stocks to buy right now? And the reality is, I bought Bitcoin yesterday. That doesn't mean I'm advising everybody else to buy Bitcoin. Like I bought last night at around $82,000 with some of the profits over the last couple of weeks of trading, right? I'm going to be rebuilding that trading portfolio up. You guys are going to get to do that with me starting again tomorrow morning at 9 a.m. Eastern Standard Time. But I bought the dip. Did that mean it was the very bottom? No, it means I liked 82,000. I had some profits from the last couple of weeks. It was time to go in and buy the dip. That being said, there is one stock right now that we're going to cover the details of why I think it could be a very interesting buying opportunity in the next couple of days, maybe next couple of weeks. You don't want to miss that one. But first, there is a tweet coming out from Eleanor Terrett that has to do with stable coins. For more on that, I'm going to throw it back over to Tshroom. Tshroom, what do we have here? What's going on today?
Yeah, absolutely. Well, jumping over here to Eleanor Terrett's Twitter account, and she's also got a podcast. Go check it out too. Eleanor is great. But she says this: both the Senate's Genius Act and the House Stable Act have passed out of their respective committees. And then also the House is set to move on the market structure now. The first hearing on the subject is set for next week, April 9th. So these are the other two major catalysts. We talked about the altcoin ETFs as a major catalyst. When those get approved, and more importantly, they become tradable on the New York Stock Exchange, on the NASDAQ, for 401k holders and for traders in the United States, that's going to be pretty big. But the other catalyst is the stablecoin bill, as well as the market structure bill. One's in the House, others in the Senate. Now, this is not saying that they've been passed. Definitely don't interpret it that way. This hasn't even been passed by one of the houses. There's two houses in the U.S. government, the Senate and the House of Representatives. The stablecoins bills are just passing through a subcommittee within the Senate. Well, why should I care, Tshroom? Because this is incremental progress, right? And this is showing that despite prices coming down in altcoins because of macro factors, the base case, the fundamental case for altcoins becoming the future of finance and being very valuable in the future is continuing to move in the right direction, a positive direction. And it's why I'm continuing to be a net buyer of these assets. So, Tim, that's the news coming out of Washington via Eleanor Terrett. She does a great job.
Yeah, and I know this isn't going to be the sexiest headline people are going to look at and say, man, that's going to move markets. But once again, for the future of the crypto industry, having proper regulation and clarity about how stablecoins can be utilized, will be utilized, is very important. If we want to get into a world where we're not working with a feeble dollar, but we're able to use crypto, we're using digital currency, and I know stablecoins are tied to the dollar, but we'll see how that one moves in the future. Bills and stories like this are a big reason why I remain so positive, so bullish long-term on the markets. And I want to address this because I saw in chat here, people were talking about it a little bit here. And I want to get to this, and we're getting to our stock of the day, a stock that I think could be very intriguing to buy in here in a little bit. But I want to be very clear with people in chat. I think the comment was going around here. Tim's been talking about round tripping. Listen, anybody who wants to get out now, sell their crypto, buy back in later, be my guest. I'm not going to stop you. But the question of when the bull market will take back off is a very important one. It's the one people keep asking. And I've given this answer before, and I'm going to give it again. The market will take off again when retail gives up. That's right. People like you and me have to give up. Now, it doesn't have to be all of us. The reality is the only retail that can stay in is people who are as hard-headed and as stubborn as I am. What does that mean? That means, guys, I'm not selling a single Satoshi, right? We could drop Bitcoin to 30K. We could drop Cardano to 10 cents. We could drop Chainlink back down to 4 cents. I'm not selling. And the reason I'm not selling is because the analogy that you should think about right now is when you watch the news, when you watch the adoption, when you listen to the Larry Finks and the Jamie Dimons and others who are talking about the future of how blockchain will be used, and you're watching governments and large institutions start to vocalize their future investments in crypto, you have to ask the question, what's going to spark it then? When are we finally going to go up? And the reality is these organizations, these entities, these whales, the composite man, they can wait a very long time. They are willing to wait a long time. The problem is retail wants to see their 2x, 3x, 10x today. They want to make money now. The fact that their portfolio is down 40, 50, 60% in the last 2 months is frustrating, and they're going to run for the hills. It's almost like in historical time, if you guys ever watch historical movies, whenever there's a fortress, whenever there's like a castle or something that there's not as many, it's not much military, it's a weaker force, but they can defend that castle, that fort. The attackers, they know they can't get in. They know they can't win the war and they can't get over those walls. But what they do is they say, you know what, we'll wait you out. We're going to create a siege around the city. Nothing's coming in. No one's going out until you surrender. You have to kind of picture the same exact thing is happening right now in the world of crypto. Whales, they're bullish on Bitcoin. They're bullish on crypto. But they can wait. They want all the profits. They want to make the money. And one of the ways they do that is by convincing retail to capitulate and get out. So who's going to stick around? Who's not going to stick around? I'm going to outweight the whales. I'm going to ride Bitcoin to the ground. I'm going to ride crypto to the ground. Why? Because I believe in it long term, and I know they do as well. But we're playing this game of chicken with them. They're sieging the entire space right now. Who can withstand and hold out, and who's going to capitulate and go? I don't know how, why, or what, but if you're asking If you are on the verge of selling your crypto, and you're asking the question, Tim, before I sell, is there anything that's hopeful that we could go back up? Is there any reason we could start bouncing right now? I'll tell you when we'll go back up again. If you are on the fence about capitulating, you've already lost. We'll go back up the minute you sell. I don't know how or why, but we can determine when we go back up. It's when they sell. So,
yeah,
not sitting there telling you guys hold your Bitcoin for forever. I'm not telling you to follow my exact same strategy. If you need to get out and pay some bills and do some other things, go for it. But I'm in this for the long haul. So anyone who's like, hey, Tim is going to sit here and round trip, you're absolutely right. I'm going to round trip. I've been unapologetic about that opinion, but unapologetic about that viewpoint. Doesn't mean you have to follow me there. We can still trade the markets every single morning. That's the whole thing, is I have an investing portfolio and then I have a trading portfolio. And my trading portfolio throughout all of this blood has been going to the upside. I mean, I lost yesterday in one of my trades, but overall it's moving up. You can make money in the markets no matter what. When it comes to long-term investment, though, do you believe in crypto? Do you believe that this is the future technology that the world's going to take by storm and is going to be a multi-trillion dollar industry? If your answer is yes, maybe just close the computer for a couple weeks, maybe a month, maybe a year. Hold on, because you will make money long-term. The question of when comes down to who's weak and who's strong. Only you guys can answer that question for yourself. With that said, Tshroom, it sounded like you wanted to kind of chime in something there before we move into our stock pick, but any thoughts there?
Yeah, I love that imagery of a castle being sieged. That's exactly what's going on. Institutions realize, holy crap, we've been asleep at the wheel while retail has been gobbling up these assets that are the future of currency. Not all of them will be, but some of them will be. Just look at the coin market cap top 20 and top 50, give you an idea of which ones they might be. But the institutions are pounding on the gates right now, trying to shake out retail that's holding on to their assets, looking around, is this whole thing going to implode? The answer, year after year after year, through 2008 housing crisis, through the pandemic, the answer has been, it gets scary, but ultimately the market gets bought back up and assets move higher. Now, there's two people that will not make it through, that will get sucked out of the castle and sell off, their assets to institutions. That's people who don't really understand what they're investing in, right? Maybe they're invested in stocks and they've had some success, so they think that they're going to just get into crypto, but do zero research and understand what it is. You're toast, right? The other person who is going to sell to institutions is folks who are improperly risk managed. Maybe you subscribe to Alpha Bros, our fundamental channel, and you understand the strength and the future of altcoins and Web3, but you aren't practicing good risk management. You have to have both. You can't go all in on a volatile asset class and expect not to have to sell at a loss sometimes to be able to pay your rent, right? That's why you keep a good amount of dry powder as working capital to be able to pay for rent, pay for your kid's birthday, pay for a medical expense that was unforeseen. You have to practice good financial sound principles in addition to investing in the future of finance. Those are the two people who are going to lose from institutions trying to buy their assets at these discounted prices. You said it very well, Tim.
There we go. All right, well, let's get into it. Stock pick of the day. Now, this one, usually Tshroom picks the stocks today. Today, it's me. I'm watching something in the news that's very, very interesting to me about a potential play in the stock market. Before I go to the chart and tell you what it is, I want to throw it to Tshroom to break a story that has come out during all this chaos, right? So I'm sitting here looking at the economy saying, all right, these tariffs are going to have major inflationary impacts on the majority of the space. I'm not going to be surprised if for the next couple of days, next couple of weeks, if we see some volatility. But again, still the stock market kind of trying to find its footing and potentially going a little bit lower, right? I'm not ready to go all in on big buys with anything big. Again, I bought a dip on Bitcoin yesterday, but I don't think that's the bottom. There is a stock right now, and I'm sure there's plenty, but this one's sticking out to me that I think could be a very good play for the next couple of months. Tshroom, what is that big story coming out today?
Yeah, absolutely. I'm going to read the story and then I'm going to give you a look at the monthly charts zoomed out for Ford Motors. The story is Ford will offer employee pricing to all shoppers for 120 years. We've put our money where our mouth is, assembling vehicles that Americans rely on and supporting American jobs, Ford said in a statement. Fox News did not hesitate. Fox Business didn't hesitate to run that story. We're going to jump at the zoomed in chart here in a second, but the monthly charts going all the way back to 1993 look like this for Ford Motor Company. You'll notice there was an absolute all-out boom in the late 90s, and then there was a giant retracement from those local highs all the way down to the bottom of the housing crisis of 97%, right? And it wouldn't recover fully back to those late 90s prices. Why? Well, because other countries got wise to the hungry American consumer base for automobiles and internal combustion engine vehicles. I don't know why I had to say it so complicated. But Ford never would be able to sell as many cars and have forward projections as high as they did in the late 90s ever again. With what Trump is doing now, this could be changing. Right. So, Tim, let's see how's the market reacting in a more drilled in time scale.
Yeah, I just want to continue to echo that. It seems like it's on the nose, right? But the simple details there, if every other foreign-made car is getting more expensive and people are going to want to look for a cheaper vehicle, and Ford is coming out saying, hey, we're going to give you this great price action we give our employees, logically, I know it seems like it's too on the nose, but at the end of the day, more people buying. I cannot unsee this stock having a good performance. Let's look at what the stock is doing, though, from a TA standpoint. With the exception of a little bit of a fake out back here in July of 2024, Ford, since back in January of 2022, is in a very bullish formation called a falling wedge. We've seen this on several other charts today. I see Charles in here saying Ford sucks. I'm not telling anyone to go buy a Ford. I'm saying potentially look at the stock, because other people are going to probably buy Fords because it's going to be the cheapest vehicle around to go get. Either way, could we revisit before this pump happens? Could we come back down to support here around $9.06? Absolutely, we could. But if we start to make a big break to the upside, on a simple level right here, you zoom on in. Let's go to a weekly chart here. If you go to a simple level, the weekly chart is saying the next level resistance back up here towards $11. The reality is if Ford really starts to pop off, which is something that the president of the United States desperately wants, he wants to see American companies, American vehicle companies start to shoot to the upside. You are looking, and this is very aggressive, so don't necessarily hold this trade for this whole time period, but you're looking at a potential breakout all the way back towards $20 per share here on Ford. That's the big side. Short term, all I'm talking about is, hey, can we get a move back down towards $9.06 and then pop back up to a weekly $11 price action for Ford? That is a stock I think could be very intriguing. It's been suppressed. It's been falling since 2021, absolutely. But the catalyst for a breakout is coming. We're getting very close to the a level of such I almost said confliction. It's not confliction, but contraction in the markets. The contraction's going to want to burst. It's going to want to go, and it's going to want to go up, or it's going to want to go down. Well, based off this news, the probability I would say that looks greater is that burst to the upside. That is my stock pick of the day. And that does wrap out the planned content for today. If you guys enjoyed the show, I know there's been some ups and downs, some details that people aren't happy with, but if you enjoyed the show and it's been helpful to you, and you're not giving up on the Investing Bros for getting the April 2nd call wrong, make sure to smash that like button and hit subscribe. Before we let you guys go, it's time for some of your guys' favorite portion of the show. We do this every single day unless we're doing like some sort of major covering some major event. It's Smay time with the factoid of the day. Smay, what do you got for us today?
Well, hello, Tim. I think I made some enemies this morning, and I will right that wrong by saying, guys, go check out the Discord where there's lots of fun other people to talk about, not Smay. All right, and with that, factoid of the day brought to you by Decrypted.tax. Which of the following historical events was partially caused by the effects of a tariff? A, the French Revolution, B, the American Revolution, C, the fall of the Berlin Wall, or D, the Great Fire of London?
Oh, is this a trick question? Because, again, part of the American Revolution was the Boston Tea Party, which you could call a tariff because it was a tax specifically on tea. Isn't it fun fact, though? I mean, in your factoid of the day, I don't know how many people know this and who doesn't. Isn't it funny that the Revolutionary War started over a 3% tax on tea? It's absolutely ludicrous. Today, you throw a 3% tax on something, people barely blink. We started a whole war for independence because of 3% tax on tea. I think I'm not going to try to overcomplicate it. I think I'm going to go B, American Revolution. What do you think, Shroomy?
Yeah. Oh man. I mean, American Revolution definitely seems like the Factoid elf favorite here. But I'm actually just gonna go with the one I know the least about, which is the Great Fire of London. For some reason, that one's calling to me. The Big Ben is
Awesome.
resonating with this one.
All right.
I have no idea.
And with that, drum roll, ladies and gentlemen, it is the American Revolution.
That makes
As
the
you
most
guys
sense.
know, it's pretty obvious. We were taxed on our tea, or vice versa, or whatever. I don't know. And we got upset because of representation or something like that. You know, history. Anyways,
Come on.
back to you guys.
There we go.
No taxation without representation.
Absolutely. Absolutely. Guys, that's going to wrap up today's show. Thank you so much for being here. We'll be back tomorrow morning with our live trading. Yes, we took this morning off, but I'll be back tomorrow at 9 a.m. Eastern Standard Time. We're going to trade this chaos. Up, down, sideways. We're going to make some money one way or another. We'll be back tomorrow for 3 p.m.'s live show as well. So make sure to come back and check out the bros. Smash the like on your way out. Hit that subscribe button. We'll see you tomorrow. Adios.